But it's been a good stretch post the budget. The market seems to have lost a bit of momentum these last couple of days, but can it rediscover it going into earnings season? Nandan Chakraborty, Managing Director, Institutional Equities at Enam, joins in to talk about that. Morning, Nandan. Good to see you again. Do you think it's just a relief rally that we saw post the budget, or is there more to it?
No, it was a relief rally because going into the budget, I think there's a lot of negative sentiment. There were global negatives, including crude oil prices going up and stuff like that, and the European scene and so on. And on the domestic front, there was, I think, a lot of fears of government having a lot of expenditure, very high expenditure. But after that, subsequently, what happened was the government actually reduced the projections for expenditure, and the Rabi crop forecasts came in very good. So these are some of the things which led to the relief rally. I think going forward, now it all depends on global factors rather than local, because if you look at what the government is planning, it's planning 5 major initiatives this year which will change the trajectory of India, but of which one of them, that is the oil and gas reforms, are the only one which will have an immediate effect. And specifically right now, I think a lot of people are worried about interest rates, and specifically the interplay of crude oil and the INR, rupee versus dollar on the global front, and what they decide in terms of the oil subsidies will to an extent decide the divestment program, will to an extent decide the government borrowing program, the subsidies. So it will be like one thing leading to another.
Nandan, morning. For what the budget has delivered, though, would you say that most of this relief rally is behind us, or does the market have potential for more?
No, budget has done its bit. Contribution of the budget is now more or less over. Now it is the oil and gas reforms and the rest of it that we need to think about what they'll do. And the government is also hamstrung in a number of ways. It's not easy for the government to maneuver given global uncertainty. So if crude oil keeps going up, especially in rupee terms, that's after you adjust for the rupee dollar and so on, it will be a little bit difficult for the government to do too much. On the other hand, if it's more or less stable, then the government may decide to pass on and therefore reduce the budget deficit.
So far, the government seems reluctant to blink on any kind of rollback with the oil prices, etc. How do you see this whole oil subsidy thing panning out during 2010, which you think is a central issue?
Very difficult to say this because, see, the government cannot, there are two things that governments do, whether it's China or India. Both have done this similar things. One is try and get assets abroad. Strategically, which China has been doing far better than us, and the other is have certain sort of schemes which are valid between certain ranges of oil prices. To do something permanent is not easy for either the Indian government or the Chinese government for that matter. So I think it will continue to be if oil is between this and this, then we'll go in for these sort of policies. The really long-term policies actually depend, we'll have to wait for a couple of years till the unique identification system is in place and stuff like that. So the full implementation of the subsidy going to, in a targeted manner to the right people, which is the real solution, will take a little bit of time.
There is the large-sized NMDC FPO that opens tomorrow, Nandan. Today we've seen quite a bit by way of secondary market action. Do you expect that to weigh down over the next couple of months on the secondary market, the primary market action?
Yes, even the new regulation in terms of people putting in money on the that you have to put in your entire monies, that also in turn affect the secondary markets. The primary market itself will affect the secondary market. So it will play a part. But these things are suppose Europe sort of recovers in a quarter down the line, and therefore the US dollar comes down. Basically the INR appreciates. That sort of takes care of most of our problems. Then everything falls through. You have divestment, IPOs go through, therefore you have credit growth in India, so the whole cycle turns. So I think that's the major call which nobody has an answer to at this point. The rest are relatively minor matters there.
Nandan, what's your outlook for the first half and the second half of 2010 now, given the global factors that you've been speaking about?
Yeah, I think with good global capital markets, I think the divestment and the 3G auction will go through well, and that will lead to the government being in a mood to spend, which will kickstart the private capex spend. In turn, therefore, credit growth, therefore the banking, especially the public sector and corporate credit growth and so on. So I think that's a sequence that we are seeing, but all this is likely to be in the second half of the financial year. I think the first half of the financial year will still remain more of a urban and semi-urban discretionary consumption. Discretionary consumption means except for FMCG, all the others. So which is why if you look at the continuum of sectors in terms of risk return, you have relatively the greatest number of drivers being in things like, auto, media, retail, stuff like that, which is discretionary consumption. There are multiple drivers there. The government has been good in the budget to consumption. You have IT and banking, which is hiring a lot of people. You have IT and housing, which has taken off, which is the multiple drivers for urban consumption. And you have consumer confidence index going up. Plus the food basket, I think, hits the rural consumer more than the urban consumer in terms of percentage of the wallet. So because of all these factors, these ones are fairly valued. So you can't have a fantastic upside in this pack of auto, but there obviously more and more money is aggregate to that because it's really defensive. That's the two-wheeler segment. Then you have retail and media. On the media, we prefer the ones which are vernacular print media. Those are doing pretty well and reasonable valuations. And then you have a segment which is the power segment. Power is something which is scalar. There are certain stocks which are cheap, certain stocks which are expensive. So stock by stock bets there. And those are scalar. There's probably one of the biggest money-making opportunities in the long term in India. The returns are massive. You have, different risk profiles of each player, so you'll have to go and, actually study them one by one, because that's one of the greatest scalar bets of something which will be a substantial part of market cap of India compared to what it is today, especially the private sector. Then in the middle of the pack in terms of risk return is really the banking and oil and gas. And as you move down, you get into infrastructure, metals and stuff like that. So as you move down here, you have higher and higher risk, which, well, some of these are cheap, but you wouldn't like to take the risks. So I think a lot of monies may concentrate into this middle sector, which is neither richly valued nor highly risky. So I think banking and oil and gas, and in oil and gas, it would be more towards, reliance and those which don't get affected as much by subsidies or the fear of, bearing the subsidies. So I think that pack is something which will move in this period till there is clarity on how this whole, chain of events that I talked about, how it rolls out.